everyone. Welcome to the Inforvest Podcast. My name is Daniel. Today is January 4th, 2021, and hope you had a good New Year's. Hope you enjoyed your vacation if you went on vacation, or your staycation, as probably most of you stayed home. And if you were watching markets today or trading markets today, we had quite the sell-off in the indices, in all four indices. We had a sell-off in the S&P 500 right at the 9:30 open. As soon as the markets opened at 9:30 a.m., we had the S&P fall all the way to the mark at 3650, and we had Nasdaq doing the same thing where it fell close to 12,507, and the Dow doing the same thing where it sold off to 29,792, rough estimate. And same with the Russell 2000, dropping down to 1922 from its all-time session high in December, or end of December. This is mostly on the back of the news that came out from British Prime Minister Boris Johnson. Well, a couple of things. One that instigated this sell-off was when Boris Johnson decided to come out today and order England into a new national lockdown to contain the surge in COVID-19 cases. And especially with this new variant, which needs to be followed and which needs to be tracked, because as I said in the previous podcast, if this new variant continues to be an issue, we could see this knee-jerk or panic in the markets continue, and especially if it's not just a case in the UK, but more of a growing concern in many other parts in Europe or Asia, and mostly, especially in America. So if we start to see the US bring out this news about the variant and it being an issue and a lockdown happening again, it could spark a larger knee-jerk down in equities. So I'll just quote you quickly what the British PM Boris Johnson said. So basically he said, "As I speak to you tonight, our hospitals are under more pressure from COVID-19 than any time since the start of the pandemic. With most of the country already under extreme measures, it's clear that we need to do more together to bring this new variant under control. We must therefore go into national lockdown, which is tough enough to contain this variant. That means the government is once again instructing you to stay home." So all this news, and especially with the PM starting off by saying that they're following and they're watching the new variant and they're keeping track of it, and especially when he said that their hospitals are more under pressure from COVID than any time since the start of the pandemic, doesn't sound very promising. It doesn't sound very optimistic. It sounds like things are being worse than what it was before. And that can cause, as it did today, we can see during overnight session, it's a very high likelihood that we could see in the European session sell-off, which would, in the futures market, which would be around 3 a.m. Eastern time, if you're living in Toronto or New York. But 3 a.m. our time, Eastern time, you could see sell-off during the European session in the futures market, which could trickle down to pushing equity prices like in the S&P and Nasdaq lower. So it's something to keep an eye on. It's something to keep track of. Also, there's certain levels of alerts that the UK has. I'm just going to pull it up here. Those different levels start from 1 to 5, a scale of 1 to 5, 1 being routine international monitoring where COVID-19 no longer is present in the UK. And then there's stages as 2, 3, 4, 5, or 5 being the extreme strict social distancing rules. and where its risk of healthcare services are being overwhelmed. So they're in that 4 or 5 range, and I believe they're in that level 5 where they are really locking down and really trying to suppress this virus. So really, it's something to keep an eye on going forward, and something to watch out, especially in equities, especially if you hold an ETF such as the SPY ETF, which tracks the S&P 500, or the QQQ ETF, which tracks NASDAQ, or IWM, which tracks Russell 2000. So these ETFs will be affected as the index moves down or up depending on how the news progresses. The second thing that's driving markets is also this Georgia Senate runoff. This is very, very important, as I explained this before in previous podcasts as well. Tomorrow will be the day where everyone will find out whether the Senate will be controlled majority by Democrats or Republicans. So there are two kind of elections that are running in the state of Georgia, and both need to be followed. And it's important that Democrats win both the seats. If you have a Republican winning one out of the two, it could cause a knee-jerk down in equities, cause that panic. The expected right now is that Republicans are to take majority of the Senate. However, there is that chance of Democrats flipping the Senate and turning it where Democrats are in majority rather than Republicans. So that's why this is very important. So the two kind of runoffs that are happening are, one is with, if I'm saying this right, Ossoff and Perdue, and the second one is Warnock and Loeffler. So if I got those names wrong, apology. But those are kind of the two runoffs that are happening right now. As for the first one that I mentioned between Ossoff and Perdue, according to the odds prediction site of 538.com, they project that Democrats currently have a lead of 49% versus which is Ossoff at 49%, who is a Democrat, and Perdue being at 47.4%. So you can see that Democrats here are in the lead for taking the seat. And the second one is Warnock and Loeffler, where Warnock is the Democrat at 49.3% and Loeffler is at 47.3%. And Loeffler being the Republican, Warnock being the Democrat. So very important to watch those names and see who is taking the seat. And why is that important? Okay, so the reason this is important is this can set the tone for Biden when he comes in as the president. And it can set the tone for, in terms of his policies, everything he talked about, where he mentioned about the $2,000, first of all, the $2,000 check that is supposed to be passed, that I think is still in talks, and which is basically a stimulus check to help the Americans. And then also bigger than that is also more stimulus to come from the fiscal side, from the White House, where Biden could help, or the Democrats could really help push in more money flowing into the economy and helping with certain programs, especially the green energy, green space area. And that's why you see today a lot of these electric vehicle stocks, a lot of these green stocks, clean energy stocks pushing up higher, especially when you look at, let's say, Tesla reaching to crazy all-time highs. And you look at other stocks like Neo or Nikola and so on. You do have some of them that have been selling off, which I'll get to later. But these electric plays is crucial and important for anyone who is invested in those, because this Senate runoff can determine what happens to all that money that was expected to be put into the clean energy area. So if, let's say, Republicans were to win the Senate, you could expect a knee-jerk down in those electric vehicle stocks. You could expect Tesla, Neo, or any of these other green stocks to have a dip lower than what the price is today. Same goes for marijuana stocks. With Democrats being and having the majority, there's a lot of talks that a federal bill will be passed for cannabis, making marijuana legal in all of US. So again, if you have, let's say, Republicans winning, you could see cannabis stocks falling lower, or if you have Democrats winning, you could see a jump in prices in cannabis and electric vehicle stocks and so on. And most importantly, if we just look at just the indices, if we look at the S&P, we look at the Dow, the Russell, the Nasdaq, and so on, with a Democrat win would bring a lot of stimulus into the economy, which will be positive for equities. So we could see Russell going back to that $2,000 mark. We could see all the sell-off that we had today be fully retraced, and targeting S&P 500 to 4,000. So that would be, I believe, on the SPY, the $400 mark. So it could really create this new euphoric buying due to this Georgia Senate runoff. So if we do get the Democrats, we could see huge push up higher in equities. Now, what if we get Republicans winning and taking over the Senate? I believe you'll get a first knee-jerk down. And when I pick levels and when I look at levels here, if we do get the Republicans taking over the Senate, I'm looking at levels in S&P around the 3,600 area. Doesn't have to be exact. It could be around that level. But around the 3,600 to buy back the S&P via call options or the ETF SPY, or you could get call options on the SPY going back to the previous levels of all-time highs. So I would be eyeing to pick up, basically buy the dip. If the Republicans were to win and we were to have a sell-off and we reach to one of those key levels in the 3,600 area, I'll look to buy the dip there, as a Republican Senate wouldn't be so bad as people would think. Yes, you have a divided Congress. Yes, you have the House being majority Democrats and the Senate being majority Republicans, but it would be good in terms of the other parts of what Biden wants to do in terms of in his term, which could help propel the markets up higher longer term. And what that is, what I'm referring to, is Biden's tax plan, where he wants to increase the taxes or tax the wealthy or the rich quite a lot, and that is something that is seen negative for the markets. And if you have the Republicans in the Senate, it'll be very hard to pass the bill to pass this huge tax law. So if that happens, it over time it would be good for equities. And other than that, we will just have to see what happens and what progresses in the Congress. It could just be 4 years of complete nothing, and maybe not completely nothing, but you'll have kind of politics and fights in terms of how much stimulus to push out and where to push out in which kind of states, which again becomes political, which is kind of sad. But um, other than that, that is what to expect if we see the Republicans in power in the Senate. In terms of the Democrats, if they come out and they end up winning, like I mentioned before, a big push up, a big rally up higher in equities, we can see S&P reaching to that $4,000 mark. And then later on, if Biden pushes that tax plan, I would think medium term we could see equities not liking that and kind of a slowing down or holding back if that tax plan is pushed too much. In terms of individual stocks, there are two stocks that I do want to mention today. Um, and one of them is QuantumScape Corp, QS. We see a big gap down today, where the price on December 31st was closed around $84, and we see today the price being around $49. Try to find some news on this. Couldn't find much. I guess this one thing that I did see, that the CEO came out and said that there's no reason for this sell-off, and everything is expected for this stock to continue and reach its goals and projections. Um, this is a stock that I believe it creates and produces lithium batteries, that is expected to go and help with these electric car vehicles, and they're supposed to charge faster, and it's kind of a, again, electric green vehicle play. We did see a rally of this stock back in November of 2020, where it was around $15 and shot up all the way to 132 on high expectations that this battery could do wonders and magic. But however, we see that huge retracement back down from 132 to $49. So this is an example. This is an example of a stock that, if let's say Republicans were to take majority of the Senate, it could see more selling pressure, because then that means that whatever plans that Biden had for putting into clean energy and clean green stocks, green companies, that kind of is pushed back until maybe 2 or 4 years, depending what happens with the seats in Congress. Um, so this is one example of a stock that could continue on its meltdown. Now, if the Democrats do end up taking majority, maybe we could see that gap being filled in the QS, the QuantumScape. The ticker is QS, and we could see it fill back to $80 or $84 and maybe propel back up higher, depending on how things end up in the Senate. Same thing with, like I mentioned before, in the other stocks like Tesla and the green stocks itself. Sell off if Republicans, or the continue euphoric rally that we see in Tesla. Now, there's some people that are stating that Tesla could reach to $1,000. It's quite crazy how much it has been going up. Um, and we've been thinking of doing or putting on puts, which are options, to bet against it if it goes to around the $1,000 mark. But something to watch out for. The other stock I want to mention is Netflix. Netflix did come out and they did say that their Christmas viewership was all-time highs, and which is sets the expectation that their earnings that is coming out this month should be optimistic and should be positive. And we did see, and as this news came out after the close, we did see the aftermarkets Netflix shooting up higher from around 522 to 535. So we see that in the overnight, the after hours session. So the thing about Netflix is, as I look at the charts right now, it has been ranging since July 2020. It's just been in this range between the 460 mark and the highs around the 474 mark. I think this news can propel or can create the catalyst for Netflix to push up higher and break that 174 mark, reaching to, sorry, not 174, 574 mark, probably reaching to that 580, but we'll have to watch and see. A play that we are looking into and we are interested in is something we actually may put on is a call option on Netflix to reach that 580 mark, and we'll give kind of the end of the month so that we can have enough time for this to play out. And if it does end up rallying because of the optimistic news and positive news, and if, let's say, earnings end up being a massive bigger than expected beat, we could see easily Netflix push up higher to 580. But since, again, like I mentioned, it's kind of a buy the rumor, sell the news kind of thing, where you could have this breakout before earnings, as already Netflix did come out and set the tone that they've had a marvelous higher than expected viewership during Christmas. So that kind of sets the tone that, okay, their earnings are expected to be way better than what we anticipate. So the high standard has been set. If they don't meet that high standard and it's lower than expected, you could see Netflix retrace way back down, back to that in that range of the 450 mark. So that kind of sets the tone for Netflix, and we're expecting good numbers for Netflix to come out soon. So quickly, just on the commodities front, oil had a big sell-off today as well. Oil started at around 49.80 mark and it sold off to the 47.41 mark, mostly off the back of the OPEC Plus, talking about raising output levels. And there was talks today, and it's expected that for February that OPEC Plus will look to raise output by 500,000 barrels per day. However, they did come out and say that they are going to continue talks and will push negotiations into a second day, which is to Tuesday. So their talks are scheduled to resume. Unusual because there's some talks here and there, or some rumors going on that Saudi Arabia argued against pumping more due to lockdowns, while Russia led calls for higher production, citing recovery demand. So a little bit of a disagreement there. Same thing where Russia and Kazakhstan had backed raising production, while Iraq, Nigeria, and the UAE suggested holding output steady. And there were also some sources that came out that they could increase productions a little bit even more. So it's already priced into the to the price. It's already priced in oil in the markets, and we can see that as we had the sell-off in oil, and anything where we do get a confirmation of the continuation of increasing output by 500,000 barrels is as expected, and there's no reason to short oil based on that, since it's already priced in. Now, if they do come out and they change their mind and they say, okay, we're not going to do 500,000 barrels and we're going to do less than that, then obviously you'll see oil prices shoot up higher. And if they end up producing or raising output more and they agree on that, then you'll see a massive sell-off continuation in oil prices. Other than that, we also seen gold prices rally, the US dollar also rally, and we see the other currencies such as euro, the Canadian dollar, the British pound selling off, just because on this whole risk off sentiment. So, and oh, last but not least, before I forget, bonds continue to rally, and we did see yields sell off. And if you haven't already, check out our podcast on one of our bond play that we have, which is the TBT play, or the TLT plays, where we think that we could see a little bit of these yield prices shoot up higher before the next Fed meeting. So more on that in our previous podcast, and how we are trading this. You can trade this via the ETF or even the options itself. Other than that, Bitcoin, crypto markets have been on a crazy rally, crazy bull run, especially Bitcoin. We did see Ethereum recently hit that $1,000 mark, and Bitcoin continues to rally. We did see Bitcoin hit that $35,000 mark. It did retrace back to the below the $30,000 mark, but quickly got bought up on that close to that 20-day EMA, and we're now trading around 32,000. What can I say? Not to give any FOMO, not to rub it in. We did see this coming in. I did mention this many times. Bitcoin continues to be that asset that you want to own, that you want to have as a hedge against the falling US dollar. It's an alternative to the other commodities and currencies that you have, other than gold. You do have Bitcoin. We did see that sell-off back in 2018, where it did reach to that $3,000 mark. That was the time to be bullish, when everybody got out of the market. You didn't get in 3,000, no problem. You had 5,000, 6,000, 7,000, 10,000, 15,000. No FOMO, of course, no FOMO. But we are still bullish on Bitcoin. We have large price targets on Bitcoin, and we have seen adoption in many ways in Bitcoin. We did see PayPal introduce Bitcoin on their platform. We did see kind of other big institutions starting to buy Bitcoin, family offices, wealthy individuals looking to take Bitcoin seriously. And again, it's this hedge against this falling US dollar, this inflation. Check out the previous podcast that I did post about Bitcoin. A lot explained there. Do follow us on Instagram at Inforvest05, so you can check out for every update that we have on the crypto markets, on Bitcoin, on just the regular markets itself, stocks, futures, options, ETFs, and so on. And if you do follow Inforvest, you did see that we posted a photo on Bitcoin being talking about its market cap being around the $420 billion mark. It's probably more now. Apple being worth $2 trillion. But the real comparison, we're not trying to compare Bitcoin towards a company. What we really want to compare is this towards a commodity called gold. Gold being at a market cap of around $12 trillion. And you compare Bitcoin, it's nowhere close to that. Nowhere close to that. So we project that Bitcoin can reach to $1 trillion market cap, which would make it at $50,000 a coin. I'll repeat that again, and I'll say this on the podcast again. I'll mention again, today is January 4th, 2021, and I'll say it here. Bitcoin can be a $50,000 coin, and we see that, and it can reach to a market cap of $1 trillion minimum, and we see it going higher than that. But for now, just to be kind of explaining this markets and kind of being sane and not insane, the target that we have is the $50,000 mark, and we are long Bitcoin. We are bullish on it. We also own a couple of different stocks that follow Bitcoin. We do like GBTC, Riot, Hive, DGG, XF. We own some of those positions there. So those are kind of our take and our belief, and not really belief, but our don't want to use the word belief, but our analysis and take on the crypto markets. And we do have different projections on many other smaller coins called the altcoins, the alternative coins. If you want to hear more, do follow us on Instagram, on Facebook, on Twitter. Do subscribe to our podcast and our newsletter. I am coming up with something soon, so you'll hear more about these coins and these new projects. So stay tuned on that. To get information on that, again, just follow our Instagram page, especially our Instagram page, where we update quite frequently there. Other than that, in terms of economic data, this is a busy week. We do have tomorrow being Tuesday, we do have ISM manufacturing coming out tomorrow for US data, and then 4:30 p.m. we do have crude API numbers coming out, and then Wednesday again oil data, and then you have durables, durable excluding defense, factory orders, services PMI on Wednesday, ISM non-manufacturing on Thursday, Friday being non-farm payrolls, very important, and also Canadian employment change data. So it is heavy data week, with addition to some Fed speakers and with addition to the Georgia Senate runoff, which is tomorrow, which will really set the tone. Other than that, hope you enjoyed this podcast. Hope you learned something from it. Hope it has given you some value. Please, again, do share this podcast. Do share our social media links, our Instagram page. Do give us a follow if it provides any value to you. We're here trying to help you be as informed as possible in the markets, giving you as much information as possible. So if you did find any value from this podcast, please give it a share. Please do follow our social media pages, our Facebook, our Instagram, our Twitter, and so on. And thanks for listening. Hope to see you on the next podcast. Cheers.